What's going on, good people? Welcome back to another episode of Trading My Live Account. Today is day number 66. It's September the 13th, 2023. We made some trades today, so let's get into it. So before we even get into any of the key levels that we have on the chart today, the first thing that we need to do is we need to talk about the news that came out today at 8:30. So let's go ahead and slide over to the calendar and let's check the news that came out. So today we had CPI come out, which is Consumer Price Index. So let's talk about that for a real quick second, just so we can have a decent understanding about what exactly is going on and why it makes a difference. So CPI measures the change in the price of goods and services purchased by the consumers. So that's very important, especially in the macro environment that we're in right now, because inflation, even though it hasn't been a hot topic lately, is still a concern in terms of what the Federal Reserve is looking to do. So whenever CPI comes out, traders are looking for that number to represent something. And based on whatever they interpret that number to mean, they come into the market and they make different types of positions. Some people are going long, some people are going short. But at the end of the day, it's a lot more participation because you have people coming into the market for a reason. And that's what usually leads to the big spike that we saw today at 8:30 when the news came out. So let's go ahead and discuss the important levels also. Now, the most important level today would be yesterday's closing price, and that's represented by this purple line in the middle of the chart at 34,993. Now, in the pre-market, we were pretty much trading within a range between yesterday's closing price at 993 and this level of support that got established in the pre-market around 5 o'clock this morning. And the bottom for this level is 39,000. Let's call it 940. So that's a pretty large range for the pre-market, which is what you should expect whenever you have a major news announcement come out. Usually it leads to expanded volatility in the market, which allows traders to make a little bit more profit. And that's a big reason why you see the volume start to increase when major news comes out. So that's pretty much the scenario that was going on in the pre-market. We were pretty much stuck in a range between closing price from yesterday and the bottom of support. So seeing that this was the case, I just started to bring out the strategies that I use when I'm trading a range. So it's interesting how over these past 3 days, we've seen a range almost, well, not almost, but every single day. I saw one on Monday, Tuesday, and Wednesday. So very interesting. So once I identified the range today, once I saw prices bounce off the bottom right here after this was what, about 15 minutes after CPI came out. Now, what's interesting is that when the news came out, the wicks spiked past that level of support, but look at where they closed at. They closed right here on that level of support, and they did that for 6 minutes straight, which tells us that the sellers were in the market. They were trying to push the prices down, but it was enough demand at these levels of support that we actually saw prices bounce back up. So once we came back up to the top of the zone once more, came back down to the range, I said, okay, once we bounced off of here, I pretty much assumed that we should be heading back up to the top of the range once again. So all I do is look for a higher low to get formed once we bounce off the lows of a range, and that's when I look to go long. So once I saw that happen on trade one, that's where I entered, and I went long here after prices bounced off the lows of the range and created a higher low. The only thing I would say is that my exit needs a little bit of work. Now, this was something that I talked about on Monday too, where I took a trade within the range, but I didn't hold it all the way up till until it got to the extremes of the range. In this case, that should be holding it all the way to the top level of resistance, which should be yesterday's closing price at the purple line. Now, the reason that I didn't hold it today was because I just wasn't quite sure how prices were going to react when they got to this level that used to be a previous higher low. Because once a level is a higher low, I like to draw a support level across it. And once prices break back down below that level, I look at that level now as resistance. So since we made a higher low right here, I just assumed that the most logical place for us to move back up to was this higher low level, was this previous level of support from the higher low that's now acting as resistance. So I said, once it got there, let me just go ahead and take profit, which that's a good idea in any other scenario. But when it comes to the trading ranges, you got to throw all of that out of the window, and you got to hold your trade until you get to the extremes of the range, no matter what the scenario might be. And also another thing that kind of made me hesitate a little bit was the fact that this range was so large. It was about a 60-point range in the pre-market, which is pretty interesting because a 60-point range, even in normal market hours, would still be fairly large. I'm used to trading like a 20 to 30 point trading range. So seeing this 60-point trading range kind of made me say, I don't know if prices will have enough momentum to go all the way back up to the top of the range. But when you add in the fact that CPI just came out, it makes sense that the market would be volatile enough to actually reach that level. So that's the biggest lesson I learned right there on trade number one. You could have a good trade, sure, but you always want to make sure you get the maximum amount that you can when trading these trading ranges. So you got to hold your trades until you get to the extreme of the range. And you have to accept the possibility of prices coming back to break even, because I also think that's another reason why I was so quick to take profits. I saw the money that was on the table and I didn't want to give it back. But in scenarios like these, when you have your best trades and your best setups, you gotta hold those and you gotta milk it and get as much as you possibly can from it in a reasonable and responsible way, of course. So that's the biggest thing I learned right there. Hold your trades when you're trading the range all the way back up to the extremes. So after that, that was the only trade I made in the pre-market. And then we kind of just see the market push back up to the top of the range, which initially was yesterday's closing price. But after CPI came out, the extremes of the range got pushed up a little bit more. So instead of it being 34,993, it pushed up to this level of resistance up here at 35,030. So we pretty much played around until the market opened, and then once the market opened, we broke back above yesterday's price right before the open, and then when it opened for real, we had a big spike up to the upside. Now when we finally pulled back on this one candle and established a higher low right here, I saw my higher low strategy start to set up. So I went ahead, I circled the higher low, extended my level of support across the lowest point for that higher low support level. And then I use that as a reference point to go long from. That's usually what I love to do when it comes to this higher low strategy. But the only thing I would say about trade number two is that I usually don't trade within the first 10 minutes. And this is a great example as to why I choose not to do that. Because even if you see some of your best setups, because the market is so volatile, you might not even see that setup come to fruition, even if it's a perfect example. And this right here, when it comes to the higher low strategy, this is a perfect higher low. But in those first 10 minutes, volatility is so crazy that anything can happen. So that's pretty much what I realized at trade two as I was in the trade. And I got out for a little small loss because I felt as though if I would have held it, I would have took a loss. And that pretty much turned out to be the truth, because that would have been very ugly if I held on to that trade. I would have definitely took a full stop loss. So was able to kind of recover on that one and minimize my losses, which is what I'm trying to do when it comes to my losing trades. Because when you have losing trades in the market, those are pretty much unavoidable. You can't help that. But what you can do is minimize those losses and try and cut those as quickly as you can. And when it comes to the higher low strategy, if you don't start to see your long trade working for you immediately as you get in within those first 5 to 10 seconds, then you need to start being very skeptical. And if you see prices start to move against you, just go ahead and get out. And that's pretty much the mindset that I had at trade number two. Now, after we move past trade number two, we see prices break back down past that level of support for the higher low. So now that level should turn into resistance. And on this very next candle, we see prices come back, retest it, get rejected from it, and then continue moving down. So once I saw that, I said, okay, I see that the trend is down for the moment, but let me see how prices react when they come back to retest what used to be the top level of the range from the pre-market that we were just talking about. So they came back to this level, they found support right there, but look at what they did. They pushed back up and came back. They tried to retest this lowest wick for the higher low support level that was established a little bit earlier. They couldn't get it. They finished about maybe 2 to 3 ticks away, and that's a pretty bearish signal, especially when you've already made a lower high. So once I saw that form, I went ahead and drew my level of support along the lows of the swing low. So that's what I like to do in a downtrend. I put my level of support at the swing low, and as soon as we break back down below that level then becomes resistance, and I look to short as prices come back into that level and get rejected from it. And that's pretty much the mindset I had at trade 3. So if we read the notes, it says I shorted here as prices came back to retest resistance, and my break even got hit right here. And I feel like in this trade, on trade number 3, I did everything the right way. I was patient. I waited for my setup. I waited for prices to come back, retest a major level of resistance, and then get rejected from it. The only thing was prices came back to test that level one more time after my break even got triggered. And I'm okay with that. I had an idea like, maybe I should move my stop up just a little bit to give the trade room to breathe. But in these scenarios, when it comes down to my trading plan, I have to respect my break even trades. So that means that if the break even stop gets triggered, you don't move it. If it comes back and it hits it, you deal with it and you roll with the punches and you look for the next best opportunity. So I think I did a good job on 3 of just staying disciplined, even though I had the urge to, start playing around with things and move things around. I fought that urge and I stayed disciplined. And that discipline pretty much gave me a good mindset and a clear mindset going into trade 4, because I said, okay, if we came back up to retest that level a second time and now we're getting rejected again, it just makes sense for me to go short right here, especially looking at the fact that yesterday's closing price is not too far below, so it should act as a magnet. When you add that into the fact that we've already established 2 lower highs, it makes sense for me to go short right here. So I got right back in at trade number 4 and took it back down to yesterday's closing price, but got out just a little tad bit early. And you guys know on a lot of my videos, I say that I get out not at the level, but right before the level. And today is actually a great example of why I like to do that, because sometimes you'll get so close to a level that close enough is good enough, and you'll get close, but it actually won't hit that level. And if you're trying to hold out for those 3 or 4 extra points, you might end up giving back all of the profit that you made as the market moves back up to your break even stop. So you always want to make sure that if you see a large move happening that's close to your profit target, you might as well go ahead and exit your trade into that strength that the market is showing. You don't want to see the strength happen and then be one of the last ones to get out, because then you would be caught up in this next candle that pretty much gave back all of these profits that all of the short traders made from trade 4 if they shorted anywhere within the vicinity that I did. So you always want to make sure you sell into strength or you cover into strength if you're short. So that was pretty much my last trade for the day. I came in, I hit my profit goal. So after that, I decided to call it, be disciplined. The market is going to move. That's always true. But I'm here to operate within my trading plan and do what I need to do. And I feel like I did that today. So I would say overall, I did a good job of just being patient, being disciplined, and waiting for my best setups to form. And even on the trades where I took losses on trade number 2, I didn't let my losses run. I understood what I was looking at. I understood exactly what I needed to see in order for my trade to be successful. And when I didn't see those things starting to form, I immediately got out. I didn't hesitate. I didn't say, well, let me just give it a chance. Maybe it might work. I was like, nope, I'm out of it, and I'll wait for the next best opportunity. And I feel like this is the mindset that I need to use going forward into the future. It's all about patience. And I feel as though I'm finally kind of bringing it all together, because first I feel like I got a good understanding of uptrends, right? But then as soon as I understood the uptrends, then the market started moving into a downtrending market on the daily chart. So then I had to get used to the downtrends again and really become more comfortable with those. As soon as I got comfortable with that, the market changed over to a range bound market. So I had to learn how to get the ranges right. But now that I have all 3 of those under my belt, I just have a much more deeper sense of confidence, because I feel as though no matter what the market offers me, I know how to operate and I know how to make profits, whether it's an up day, a down day, or a range bound day, or any combination of all 3. So I want to stay on this path, and in order to do that, I got to keep studying and I got to keep working on just making the best possible trades on the back testing simulator. So that's pretty much the plan I have. So I'm gonna go ahead and get to that. I hope you guys were able to learn a lot about using yesterday's closing price as an anchor for the trades that you want to take, and also being able to get out of your losing trades when you see that they're not working for you. Don't hesitate, do it immediately, and don't look back. So I hope you guys learned a lot about that today, because I definitely did. I'll be back tomorrow on September 14th, somewhere between 9:30 a.m. and 9:40 a.m. ready to run it back. But until then, you guys, study hard and take it easy.